Welcome back to Investing Talk podcast. We've got a really critical question on the table today, one you've specifically asked us to unpack. Is now a good time to buy Clearone? We've taken a stack of sources, financial filings, market reports, all the available research, really trying to give you the clearest picture possible here. Before we jump in, if you're finding value in these explorations, please hit that subscribe button, like this episode, and definitely leave a comment below. And hey, if there's a specific company you'd like us to look into next, just let us know in the comments. We do read them. So, Clearone. They operate in, well, a pretty niche corner of the audiovisual communications hardware market. But as we started digging into the sources, it became clear pretty quickly this isn't just a routine company check-in. This is a story of a company facing some really profound challenges, making that buy now question incredibly compelling and, frankly, quite urgent to understand. Okay, let's pull back the curtain on Clearone because our sources aren't just painting a stark picture, they're practically flashing warning signs. We need to start with the deepest crack in their foundation, their financial health. What's the most immediate, glaring issue that jumped out at you from the documents? What's the core issue here, really?
Let's be blunt. The single most critical insight here, and this is straight from management, is that Clearone is facing, well, an existential crisis. They've actually flagged substantial doubt about their ability to continue as a going concern unless they can raise significant capital or, dramatically improve inventory sales.
Yeah.
This isn't just a bad quarter or a slight bump in the road. It's a red alert for survival. And what's equally concerning is the persistent negative operating cash flow. Clearone actually used $2.6 million in operating activities year to date through June 30, 2025.
Yeah.
This tells us the business simply cannot self-fund its day-to-day operations.
Wow, using $2.6 million just to operate. That's
Yeah.
that's a stark figure. And it gets even more alarming when you consider their cash on hand. I'm really struck by the contrast to their late 2023 claims. Didn't they claim they had eliminated debt and had over $23 million in cash then?
That's right, they did.
So what exactly happened? How did they go from that to?
But what I heard was an astonishingly low amount of cash recently. You're absolutely right to hone in on that disparity. It's jarring. As of mid-2025, even after a recent $3.0 million convertible note offering, which, just quickly for our listeners, is basically a loan that can turn into company shares, potentially watering down existing shareholder value. After that, Clearone was left with only $1,678 of restricted cash.
Seriously, $1,600.
It's $1,678 restricted cash. It's not just low, it's virtually nothing. It screams severe liquidity constraints. The official explanation for this dramatic shift from late 2023's $23.1 million cash position isn't laid out as one single catastrophic event in the filings we saw. But looking at the subsequent filings and that 2025 operational cash burn, well, it clearly points to a significant and rapid deterioration in their financial health. It suggests an unsustainable burn rate, compounded by just not generating enough revenue to cover costs. They had to tap into whatever capital they could find, and it just evaporated quickly.
So, okay, they're staring down this financial abyss. There's a going concern warning. They have basically no cash. It makes you wonder what's actually happening at the ground level. Is the core business even performing? Are they selling products, making any money?
Well, the operational performance is certainly contributing to the problem, not solving it. We're seeing weak revenue across the board, particularly in the Asia-Pacific region. That reported a staggering 73% decline against the prior year's quarter. 73%.
73%. Wow.
Yeah, huge drop. This was attributed to historical production shortages, they said. But the bottom line is there's just no evidence of sustained revenue growth anywhere in our sources.
And regarding profitability? Well, the latest data confirms a string of recent quarters with losses, consistent losses. The company has been forced into ongoing cost reductions and workforce cuts. Those are usually signs of a business under extreme pressure, right? Not one that's thriving.
Definitely not signs of health, no. And to make matters more opaque, there are no public future earnings projections available from the company. That's often another red flag, signaling a lack of clear forward visibility for investors.
Right. So if they're struggling with sales, shrinking in key markets, consistently losing money, how do they even stack up against rivals in this specialized audiovisual communications hardware market? Do they have any kind of competitive edge left at all? Anything?
Honestly, based on the sources, no. Not really. Our sources don't point to any durable competitive advantage for Clearone. They face direct competition from larger, stronger, and crucially much better capitalized players. They're up against giants in comparison. And historically, patent litigation, remember that case against Shore?
Yeah.
That significantly damaged their market position. It diverted resources, focus.
That's a big deal.
It was. And critically, Recent filings offer no basis for any sustainable differentiation today. If anything, the inventory shortages and the operational stress we've already talked about further hinder their ability to compete effectively. It really seems like they are consistently playing defense, just trying to survive, rather than innovating or capturing new market share.
Okay. Given these really deep-seated challenges, the cash crisis, the going concern warning, the operational struggles, what strategic steps has Clearone actually been taking? I saw a mention of a reverse stock split and even a special dividend. Now, for many investors, those might sound like positive moves on the surface. Is there any scenario, according to the sources, where these could be interpreted as part of a genuine turnaround strategy? Or is it, well, something more desperate?
That's exactly the critical question these moves spark, isn't it? Are they a sign of a turnaround, or do they indicate something more fundamental, perhaps more final, about the company's future? Let's break it down. First, the reverse stock split. In June 2025, the company executed a 1-for-15 reverse split. Now, this move is typically done to regain Nasdaq bid price compliance, basically to get the stock price back above the $1 minimum to avoid being kicked off the exchange. And they did achieve that, technically. They traded above $1 for 10 consecutive days, starting June 24, 2025.
Okay, so it worked in the short term for compliance.
It did. But, and this is a big bet, a reverse split is overwhelmingly viewed by the market as a negative signal for investor confidence. It shrinks the number of shares to boost the price per share, but it doesn't change the company's value. It's certainly not seen as a growth catalyst, more like a defensive maneuver.
Got it. And the special dividend. That also happened around June 2025.
Yes, declared in June 2025 as well. The board declared a one-time special stock dividend on June 30th, with a record date of July 11th and a payout date of July 18th. Now, this dividend is interesting. It provides legacy shareholders with a 100% stake in the proceeds from a potential asset sale.
Hold on, let's clarify that for our listeners. This special dividend, it's not a celebratory payout from a profitable year, is it? It sounds much more like a crucial signal that they're effectively looking to liquidate assets, offering shareholders a piece of a potential sale, not future earnings. Am I reading that right?
You're absolutely reading it right. That's the key distinction. This dividend issues something called Class A redeemable preferred stock. And this stock will only be redeemed, meaning paid out for proceeds, if and when an asset sale actually concludes. It's a very clear signal of ongoing corporate strategic options, explicitly including divestitures or, major restructuring. In fact, management is actively soliciting buyers for substantially all assets. That phrasing comes straight from the convertible note terms and filings. And this whole process even has a mandated 180-day timeline for asset divestiture.
Wow. A deadline.
A deadline.
Yeah.
So yeah, it's not a payout from strength. It's a formal mechanism to distribute funds from what looks very much like a forced sale of assets, if they can even pull it off, rather than any sign of future growth.
Okay, so the corporate actions seem less like a turnaround and more like managing a potential wind down. How is the stock itself behaving through all this? What do the technicals tell us?
Yeah, when we connect this to the broader picture, the technicals of the stock itself really reflect the underlying stress of these events. Post-reverse split, Clearone has traded roughly in the $1.10 to $2 range, not a huge range. That $1 threshold serves as critical support, mainly because of those Nasdaq requirements we mentioned. Get below that for too long, and they're in trouble again. $2 seems to be acting as the current resistance level.
So basically stuck between compliance and not much upside.
Pretty much. And crucially, the medium-term moving averages, the 20, 50, and 100-day averages, they all slope downward. That indicates a persistent negative technical trend. No sign of a bottom forming yet. Volatility remains high, which you'd expect, right? Driven by the ever-present delisting risks, the recent split, the capital concerns, it's a shaky situation. Indicators like the Relative Strength Index, or RSI, frequently signal oversold conditions, but that hasn't translated into buying pressure. There's no sustained bullish reversal evident from the MCD, another trend indicator. All these technicals point to a stock under significant ongoing duress.
And what about the broader market sentiment or analyst coverage for a company going through such significant, almost existential changes? Is anyone on Wall Street even paying attention? Are insiders making any moves that signal confidence or lack thereof?
Well, as of September 2025, there is virtually no mainstream analyst coverage. We couldn't find any upgrades, downgrades, price targets, nothing in our sources. That suggests a stark lack of institutional interest in Clearone. The big players seem to be staying away.
Not surprising, given everything else.
Not surprising at all. And regarding insider activity, there are no recent Form 4 filings for insider buying or selling. This absence usually signals limited insider confidence. You'd hope to see insiders buying if they believed a turnaround was imminent, right?
Yeah, exactly. Silence speaks volumes sometimes.
It does. And even a recent board change showed no beneficial ownership for a new board member as of August 2025. So no skin in the game there, it seems. On social media, the sentiment is generally negative, lots of chatter about the going concern risk, the potential for liquidation, but interestingly, no major retail trading surges, like you sometimes see with meme stocks. It indicates that even the speculative retail crowd is largely cautious here.
Okay, we've laid out a pretty grim picture so far, honestly. But for anyone still considering this company, perhaps as a very high-risk gamble, the real what now question comes into play. What are the immediate catalysts, the critical milestones investors must watch for in the short term? And what does the far horizon look like for Clearone if these issues just persist?
Right. The next quarter for Clearone is truly defined by the aftermath of that special dividend, and, more importantly, those ongoing asset sale negotiations. The single most significant short-term catalyst is, without doubt, an asset sale announcement. The completion, or even a partial sale of major assets is under active consideration. It could be announced literally any time. That's the primary driver of any potential immediate movement.
So, all eyes on a potential sale. What else?
Beyond that, Q2 earnings were released back on August 5th, 2025, and Q3 earnings are anticipated around October 30th, 2025. These reports will give us the latest snapshot of their operational performance or lack thereof, and crucially, their cash burn rate. We also have potential market events, things like ETF rebalancing on September 1st, 2025, or reporting on summer institutional holdings around September 10th. These could increase trading volume and short-term volatility, but honestly, they're secondary to the asset sale news.
Any chance of more funding?
There is. There's an option for an additional $2.0 million note, according to the terms of the last transaction. So another capital raise remains a possibility, likely further diluting shareholders if it happens. And then you have the purely speculative stuff. Rumors. You always hear whispers about strategic partnerships, maybe a merger, potential share buyback authorization, or technology licensing deals. But it's crucial to stress again, these are currently unsubstantiated, not backed by the sources we reviewed, pure speculation at this point.
Okay, so focus on the asset sale and the cash burn. What about the long-term outlook? If this sale doesn't happen or doesn't raise enough?
The long-term outlook is, frankly, quite stark. If the asset sale isn't completed successfully within that time frame, the company must liquidate assets to redeem that new preferred stock, according to the transaction terms. This implies that any long-term recovery, if you can even call it that, hinges almost entirely on strategic transactions and asset sales, not on the core business turning around organically. There's a heightened, very real risk of forced delisting from Nasdaq and potentially outright liquidation if liquidity doesn't improve significantly and rapidly.
So to summarize everything we've discussed, all the financials, the operations, the strategic moves, the market reaction, if you're an investor considering Clearone right now, what are the absolute biggest, most pressing risks you need to factor in? What's the real likelihood of, well, losing everything here?
Yeah, when we talk about risk for Clearone, the ultimate concern is absolutely the potential for a total loss of investment. It's high. The primary risk is that going concern warning itself. Management explicitly stated there's substantial doubt about the company's ability to continue without a major asset sale or a significant capital injection. We can't ignore that. Second, the severe liquidity risk. We talked about the persistent negative operating cash flow and that shockingly minimal restricted cash. They simply don't have the money to operate long-term as things stand.
Right, running on fumes.
Yeah, exactly. Then there's execution risk. What if the asset sale fails or doesn't raise enough? That could easily result in forced liquidation, and equity holders are usually last in line, potentially wiped out. Plus, dilution remains a significant concern. Those convertible note terms, potential future preferred stock, existing shareholders could see their stakes significantly devalued. And finally, while they fixed it temporarily with the reverse split, that Nasdaq compliance risk hasn't vanished. Sustained operational weakness could easily push the stock back below $1, leading to delisting.
Okay, so the risks are numerous, severe, and existential. With all that laid bare, let's get to the bottom line. What does this all mean for our listener who's asking, is Clearone a good time to buy now? What's the verdict based on everything we've seen?
Okay, the verdict. Based on this comprehensive review of all the sources available to us, the overall rating we'd assign is a 2 out of 10.
2 out of 10. Pretty low.
Very low. And the rationale behind this is clear. There's fundamental weakness across the board. We've seen poor recent revenue, persistent losses, severe liquidity pressures, and those explicit going concern cautions directly from management. Technically, the stock exhibits a steep negative trend, low volume, and it's stuck in a narrow trading range, post-reverse split.
Right.
There's simply no evidence in these sources pointing towards an imminent recovery of the core business, that asset sale process. It appears much more like a wind down or a restructuring under duress than any kind of growth catalyst for the future. So this presents an extremely high risk of further dilution, potential delisting, and even complete liquidation.
So who, if anyone, should even consider this stock?
Frankly, Clearone is neither attractive for normal short-term trading nor for long-term investment for the vast majority of investors. It's just too risky. It might only be suitable for extremely speculative, very risk-tolerant traders who specifically seek exposure to special situations, like the potential outcome of this asset sale. They need to understand they could lose their entire investment. For almost everyone else listening, it's simply not recommended based on the current evidence.
Wow. Okay, that's certainly a lot to process, and it paints a very, very cautious, even dire picture for Clearone. It really underscores the importance of looking past headlines, maybe past a low stock price, and digging deep into the financials, the strategic moves, the actual health of the business. That potential asset sale, while technically a catalyst, seems fundamentally tied to addressing severe financial distress, not capitalizing on any kind of growth or turnaround. So for you, our listener, the question of whether to buy Clearone right now comes with some incredibly serious considerations about extreme risk and the very real potential for significant, even total loss. As always, please remember this information is for educational purposes only. We strongly encourage you to do your own thorough research, consider your own risk tolerance, and consult with a qualified financial advisor before making any investment decisions. And maybe a final thought to leave you with. In a market that's full of diverse opportunities, companies growing, companies innovating, how much risk are you truly willing to take on a company facing what looks like a potential liquidation scenario, regardless of any short-term speculative price movements? It's a critical question to ask yourself with any investment, but especially one like this. Thanks for tuning in to Investing Talk podcast.